everybody for joining us back here at 3IQ's channel. We're sitting here once again with the head of research, Mr. Mark Connors himself. And Mark, it's been a pretty exciting year so far. How are you holding up, sir?
Hey, Michael. Well, thanks. You know, the boost in price always helps after a tough 22, but as we know, nothing comes easy in digital assets. So there's been some regulatory FUD and, I would say legacy from folks like, Celsius and unfortunately the specter of SBF, looming in the headlines to muddy things. But overall, still constructive.
Yeah, 2023 has so far kicked off really strong, and you guys had actually did a 2023 outlook. And I'm curious, so what did you guys get right from that? What did you guys get wrong? What does the magic 8 ball say, so to speak?
Yeah, so the good news, bad news about writing is that your feet are always held to the fire. So our thesis was simple, and it's been since we started our research department. There's a problem in regular finance and the economy. There's just loads of debt and growth is slowing. And what's happened there is now the central banks are using that tool, but to declining degrees of utility. They're just using more money, but velocity is not going higher. So what does that mean as far as a problem? It means that you can have a business and hire the right people and try to get involved. But if a central bank changes interest rates, it might change behavior, something you couldn't anticipate. So the tectonic plates of economic innovation and entrepreneurship are a little shakier than they say have been in years past. So that's the problem. As far as the opportunity, it's still intact. We were talking about the Coinbase news. Mm-hmm. And, I was telling you that I thought that was a great vignette for the two vectors of adoption that are happening.
Mm-hmm. Yeah, I definitely think on one hand, it seems like what's been going on has seemed negative in a way, as you're getting a lot of pushback from regulatory forces. But you had described it as almost maturing or hybridizing in a way. Can you elaborate on that a little bit more?
Yeah. So I mentioned on Coinbase what they're doing and innovating is a couple of weeks ago, they announced that they're launching a decentralized protocol called Base. It's a soft fork or hard fork of the Optimism layer on Ethereum. They're not going to have a governance token. They're going to allow people to come in and play in the sandbox. They're going to offer some support and then walk away. Without going into details, it's a shift away from their very centralized, regulated animal into DeFi, which is, from a spirit of the game standpoint, a thumbs up. The community likes that. And they'll probably bring in some folks because it'll be an easier UI that normally wouldn't do it. So that's one area. But then a week later, they buy a bank. So they know both things are happening. They can't get away and hold their nose and say, I'm going to be a DeFi degen. They're like, I'm in reality. Yeah. I need to play both. So that's that public-private partnership that you had mentioned, or that hybrid model that we had talked about. Mm-hmm. And it's because of stablecoins.
Yeah, stablecoins have been a lot of what people have been talking about and kind of front and center lately. And I think this was something that was always coming. Eventually, stablecoins were going to fall into the crosshairs. But what do you think about that, Mark?
I think it's acceptable, even if you're. I think if you're a true libertarian approach, laissez-faire. But at some end, even libertarians believe you have to have, strong borders and interstate highways, and there's certain things. I think when something touches the U.S. dollar and there's a reliance, I think oversight and transparency is absolutely warranted. And the good news, I think, is that this public-private partnership where the FSOC or the SEC comes in and says, hey, this is how we're going to play this game. You need to be a bank. If any U.S. entity is going to, touch this coin, it needs to be a regulated platform. Mm-hmm. Second, the assets backing it. And to your point about, some folks who said, I have it, trust me. No, They're going to be audited, and I believe they're going to reside at the Fed.
Mm.
So you're going to be seeing this new buyer of treasury bills actually hold them at the Fed. And they'll allow the private entity to run the technology so the Fed doesn't have to get involved and figure out how to issue a stable coin.
Yeah.
So to me, it's a I like the idea because stable coins themselves aren't even, they're not on-chain items. They're fabrications that mostly institutions have to issue that then end up in liquidity pools.
Mhm.
So I think you can be a Bitcoin maxi and have stable coins be regulated. I'm sure some people are already DMing me on that statement, but uh, it's constructive for the space, period. And a sentence, it's constructive. They're not shooting it. If they're not shooting it and killing it, they're going to grow it.
Yeah, well said, Mark. I think the key takeaway from what you just said for me there was transparency. And I mean, I know a lot of people talking at your Bitcoin maxis or your DeFi degens, so to speak, hate the R word regulation. But we've now seen with FTX and all these other organizations what a lack of transparency can really do, and it's not pretty.
Yeah, and that what you just said about about a maxi and about do they agree or even want to speak about regulation, or is it all hands off? We were at a conference, our firm in August up in Calgary, and we were speaking about our theme about wartime finance. This is the third epoch of the dollar evolution since Bretton Woods, Nixon's what was it, Bloody Sunday or Sunday Night Massacre, releasing Tide of Gold. And as we're talking about it and introducing, some person raised their hand and says, "Hey, that's great, but don't you believe in self custody? You're an ETF, you're a rent taker." And we say, "Hey, listen, yeah, we do have a regulatory wrapper. We have a spot product. It tracks the best of any spot product in our region, and obviously you don't have the U.S. So we are introducing it in a regulatory acceptable manner, with a high throughput to spot. And our business, we see it evolving to support direct ownership
Mhm.
and to support the education. So I think that, and it was, I mentioned it because the person kind of took that in and said, okay, I get that. So you're evolving your business over time. Yeah, we don't want to stay what they call like a rent taker.
Yeah.
We see there's more services and products coming forward to help, whether it be with UI or actually with asset management, et cetera. It's a $900 trillion space
Wow.
in the assets out there. 400 to 900, depending on how you count derivatives.
Mhm.
Bitcoin's, under 400 billion. The space is 1.1 trillion. So we have a lot of room to go. So we're finding and holding our breath about process and not really trying to be thoughtfully expansive. And again, that's why my hat's off. Don't know Brian Armstrong. I think he's doing it the right way.
Yeah. If you're not willing to change, especially in this space, if you're not willing to change, you won't last long. You have to be flexible. And a lot is like we're going to continue to see rule changes, regulatory changes from all sorts of different countries. We're going to continue to see rise and falls, and being flexible, limber is what you have to do.
Yeah. Yeah, that's the case, and you're seeing it with some folks, and you're also seeing, I think, more importantly, or as important, the folks who aren't, and we won't mention names, who stick to not being transparent, whether it be in the stablecoin space. If you're not transparent at this point, and you have to, I think you got to assume the worst. You've been paid so far to assume the worst,
Yeah.
and I see no reason why that's not the case.
Fair
I mean,
enough.
there's bad behaviors going on. I mean, look at even with a regulated entity like Silvergate. If you looked at the decisions they made, even in a transparent regulated entity, the asset liability mismatch they had between 2021 and their SEP 22 documents, if you spent the time to look at it, that was a problem. It was a problem for the unregulated, CFI fraudsters. but it's a problem for anybody in finance. You have to have a sound business model, and you need to have it be audited as an investor.
And again, if you don't, at this point, it's probably the biggest red flag you could throw right now.
Yeah.
Transparency.
Or as Caton Long would say, don't use leverage.
Yeah.
That's the other thing. Just let's be a proper custodian, which is something that I came over the top there because that is foundational, I think, especially to the Bitcoin experience. You do not need to, nor should you add leverage to this position.
Well said, and thank you again, Mark, for joining us here today. I know the year's been a blast so far. Is there anything else you want to add or let people know about before we go?
No, I would invite people to go to our website and look at our 2023 outlook. It looks at the opportunity in digital assets, Bitcoin, Ethereum in particular, in the context of what's going on with your economy. So whether you have kids, whether you're thinking about where to invest for your 401k in traditional assets, please take a look and bring us with any questions because we do look at it holistically.
Well, then, thank you everybody for watching. Mark, once again, thank you for joining. Everybody stay tuned for more coming soon. Don't be afraid to visit the website, and please have a wonderful day.
Thanks. You as well, Michael.